Welcome back. Recapping tonight's top story, Singapore state investor Temasek's net portfolio value jumped $49 billion to a record $518 billion, driven by strong investment gains. And for more analysis on its performance, Professor Sumit Agarwal joins us now. Professor, good to have you with us. Now, looking at Temasek's big bet on AI, is it ringing any alarm bells for you, especially amid those concerns about an AI bubble?
Not really. I mean, look, AI to me is comparable to some big changes like electricity or the internet. It is a general purpose technology that I think will transform almost every industry. So increasing exposure makes, to me, strategic sense. But AI investment also carries some risk, execution risk especially, because to me right now the valuations are high and the technology leadership can change rapidly. So I think there are opportunities, but there are also some risk in this.
Yeah, and speaking of that risk, given how deeply AI is embedded across many of its portfolio companies, could a sharp correction in the sector have a wider impact on its overall portfolio?
Clearly. I mean, look, the fraction that is invested in AI is rather small at this point, 6%, and they're forecasting to grow to around 15%. So even a big correction will not completely reshape the portfolio that Temasek has. But what Temasek has shown that across, wars and pandemics and crises, they have essentially been able to have a diversified portfolio, and they have invested through business cycles. This has allowed them to outperform. Essentially, they've been recycling this capital into sectors which I think have been showing strong long-term growth prospects.
Now, Prof, what is the big picture you're getting right now on Temasek's strategy, looking at both its investments and its divestments as well?
So to me, the strategy appears to be shifting from simply owning assets to positioning around global structural trends. Okay, they're increasing exposure to AI, infrastructure, and private credit, which continues to recycle credit away from areas where future growth may be slower. That reflects, to me, active portfolio management than essentially passive investing. So the best investment strategy is not to chase yesterday's winners, but to look at where the future growths are.
And looking at that future growth, let's delve a bit deeper into the portfolio allocation here. Temasek's sustainable living portfolio, that has grown to $49 billion, but its total portfolio emissions were unchanged. So what does that tell us about its sustainability strategy?
So it shows that sustainability is more complicated than simply reducing emissions every year. So real-world decarbonization often requires investing in industries that are themselves transitioning. So you can think about these as transitory changes, but to me, the more important question is whether not whether emissions fall every single year, it's whether capital is helping accelerate the transition to lower carbon economy while remaining essentially commercially viable.
Do you think there's a contradiction here somewhere? Could Temasek's new strategies of investing in AI, the core plus infrastructure, and also private credit, could that potentially go against its sustainability goals?
Not really. I mean, I think there is a big discussion and debate that, look, AI and sustainability are at odds with each other. But I feel that AI is going to help the sustainability agenda, whereas sustainability will also guide how we think of AI and how AI will progress over the few years. So I think they are symbiotically kind of aligned with each other. And I'm more hopeful or more optimistic how these things will work together than pessimistic about it.
And looking into the future as well, how well is Temasek positioned to navigate global economic and also the geopolitical uncertainty?
So I think it is relatively well positioned because of the diversification and especially in this fragmented world we are living in today. So we are facing this geopolitical competition, supply chain restructuring, AI disruption. And I feel despite all of those, when you look at the returns that Temasek is generating, that kind of tells us that they're doing active portfolio management and really chasing where the returns are in the future.
Professor, thank you for sharing your insights with us. I've been chatting with Prof Sumit Agarwal from the NUS Business School.